Good morning, everyone. My name is Anae Augustini. I'm CEO of CID Insurance Programs, and I want to welcome you to Navigating Workers' Compensation. I've got a great team of underwriters joining us today, as well as our marketing specialists. So let me first introduce Cesar Serrano. He's our new business work comp underwriter.
Good morning, everyone.
And then Lexi Goldspring, who handles all of our renewal work comp underwriting. And say hi, Lexi.
Hi, everyone.
And last but not least, Jacob Call, who's our marketing specialist, who works behind the scenes to make everything seamless for you guys. Say hi,
Hello,
Jacob.
everyone. Hello.
Great. So let's get started. Let's talk about what we're going to be learning about today. Let's go through our logistics first. So everyone's going to be defaulted to mute because it's too many people trying to talk at once, and so you'll be able to hear but not speak. Most of you that have joined us before already know this routine. We like to have questions. We welcome questions, but you'll need to use the chat room because you're not going to be able to speak. But please, throughout the whole presentation, feel free to type in any questions into the chat room, and we will take the time to answer them as we go. At the end, there'll be a short survey, and we, again, welcome your feedback and would appreciate you taking the short survey so that we can get better and provide more, better webinars for you and other services as well. So let's talk about what you're going to learn today. So we're all, workers' comp, I think, for most commercial brokers is one of those that is a moving target in the learning process. So our objective in this is to really help you sharpen your knowledge of workers' comp, and we hope that all of our webinars will do that for you. Today we've decided to do it slightly differently, and I think this is going to be an interesting way for you to have perspective. We're going to present it in two case studies that will broaden your workers' comp strategies. So you get a better understanding of dissecting, a risk and how the underwriting, how we went about underwriting it, the placement of it, and the presentation to the client. So that should help you. And then, we want to help you more effectively compete in the workers' comp arena because it can be. The bigger the premium, the more competitive it gets. So let's get started. So our first case study is going to be a new business submission, and Cesar Serrano is our new business underwriter, so he'll be joining us in a moment to give us some details on this case study, give us the background and all the details of it. But this is a larger premium policy, and so he's going to be talking about the process of you go about how to start binding larger premium policies. This will give you some insight into what you need to do. How to gather the right underwriting information is definitely the winning equation to larger premium policies. Asking a lot of questions is important. And then what makes you better than the competition? You have to take the time to stop and think about that. So let's take a look at the case study. Okay, this is case study number one. It's Seaview Hotel. Now this happens to be an insured. The insured is a sole proprietor. His name is John Smith, and the hotel has a DBA name of Seaview Hotel. So it's a DBA filing. It is not a corporation. It's not an LLC. It's a sole proprietorship. It's located in Santa Monica, California. And you'll see, which Cesar will talk more about, is that you've got a restaurant class code of 9050, which is the majority of your payroll. And then it appears that the clerical class code 8810 was introduced, probably someone in accounting that's doing an accounting function that's just doing office work at 25,000. They have an X mod. They have an excellent X mod of 69%. And so that could be an indication of good claims history. But you could, it's a rolling 3 years, so it might also be an indicate. It's not necessarily tell you whether you've had claims in the last year or not. Premium is $39,209. So what is this? It's a boutique-style, non-franchised hotel. It has 15 employees. So let's bring in Cesar Serrano, and let's get some more facts from him and get the story behind this. And I think it will help you in understanding how to go about gathering information for these types of risks. So Cesar, what are the important underwriting facts that that we need to know about this particular risk?
Thanks, Renee. Like you mentioned in the overview of it, yes, it is a non-franchised hotel. It's not a motel, and it's individually owned, sole proprietorship. So he's not affiliated with any type of hotel like a Days Inn or anything like that, or a Marriott or anything like that. There's no restaurant on the property either, so they don't have the complimentary breakfast as well. They don't have any of that. There's no shuttle service either, so it's a little.
Cesar, on restaurants, do you is it restaurants a good exposure? Is that a harder to place exposure?
For hotels, it's okay to have a restaurant. It doesn't complicate the risk at all. It is separately classified. They still will classify it as a restaurant under 9079. So it just depends really on the appetite of the individual carrier, whether they like to see that operation. But typically, it's not a big deal to have that restaurant operation along with it. What you see some issue with is sometimes if they have a shuttle service. If they're shuttling, especially if you're close to like theme parks and things like that, or landmarks that they're shuttling people over to, then you have that driving exposure, and some carriers don't like to see that driving exposure. So that's where you might run into a little bit of a problem. But again, it really depends on the appetite of the individual carrier. The other thing, as far as the hotel goes, is they have a handyman person on site. So it's not high exposure. They're not replacing windows and things like that. It's just typical handyman type things. Fixing doors and unclogging toilets and things like that. Maybe some touch-up painting. Nothing too harsh. But with this particular risk, the incumbent carrier, which is with Farmers, is not renewing because of the handyman exposure. Even if it was on the lighter side, they just did not want to see that. So they were looking to non-renew that policy at the expiration.
Interesting. So how did you go about the underwriting and placement process, Cesar, knowing that their Farmers is not non-renewing?
Well, you start with the application. You get to see why. Well, you ask first what the reason is for that non-renewal, why they're doing it. You'll want to look at the website. If they have a website, just do as much research as possible. As far as the agent goes, to get all the right information and present it up front. If they are non-renewing, you would want to start that process as soon as possible, as soon as you get that notification, but minimum would be 60 days out.
Got it. What about the carrier placement process?
Well, with us, I mean, I have a really good idea of which carriers entertain that specific classification, which ones like that class. So, I have a pretty good sense of where to take it to. There's, we have some carriers, and not all carriers like to write that class, and it's true for a lot of other types of classes. So you have to know your markets and where to place it, and how to present it to them as well.
So you bring that expertise to the table, which I'm sure our brokers really appreciate. So when it comes to other factors, when you get into larger premium accounts, it can get complicated sometimes. There was something interesting that occurred with this particular risk. Could you share that with us?
Yeah, definitely. We originally quoted it just as a hotel, and then probably about 30 days later, we come back and the agent tells us that the insured had advised that he has individual properties that he owns as well, that he manages, and wanted to get that covered as well. But it's a little bit unique because, again, the hotel was sole proprietorship. It wasn't a corporation or wasn't an LLC. So he had, somewhere around 5 or 6 individual rental homes that they owned. And what he wanted to do was add or have that handyman that was working at the hotel also do the handyman services for those homes that were being managed. So that kind of changes things in the eyes of the carrier at that point.
How did that affect the quote?
Well, it affected it because you're adding a new classification code. It's no longer just a hotel exposure. Now you're looking into a 9015 building operations classification. That's where, if you have individual home management, that's typically how it's classified, as under 9015, and it becomes a little bit pricier of a rate when it comes to that classification as well. So what ends up happening in their case, we had a really great quote, and it changes the rate or the tier rating for with that carrier, and it kind of bumps it up into a different tier because of that 9015 class that's included in there, and it just completely increased the hotel rate, the clerical rate, and you're now adding that 9015 rate and adding payroll to that, which is going to be more expensive than even that hotel class. So
right.
So you're looking at now, you're jumping premium from, you're adding another $10,000-$15,000 in premium just because of that.
Right.
Although exposure didn't really change at all, for the hotel, but because you're now, rating it in a different tier that's a little bit more expensive, then, that can definitely affect it, and it did in this case. Luckily, at the end of the day, the insured decided to just contract with a property management company for their rental units, so which included
a handyman service. Exactly.
So that kind of took care of that problem, and we were able to revert back to the quote, the original quote, and apply the right credits and everything like that to get the best pricing.
Excellent. Okay, that's interesting. So, and in the end, you got them. You were able to get them better pricing and the inclusion of the handyman being acceptable to the carrier, whereas Farmers was non-renewing because of the handyman service.
Right. It actually ended up being that we ended up saving them at about $10,000 over what they were paying with the original carrier. So even
Excellent.
at maintenance service on there.
That's great. Okay, so let's talk a little bit more about this. Caesar, do you want to give a few pointers to our brokers out there listening? The presentation to the client is so important. What does that look like to you?
Yeah, well, we have some really great resources online for this. We have an example of a template, a quote template that we have, or a proposal template online that can be used. You can download it from the CID website. But yeah, definitely want to make a good presentation to the insured to be able to give them all the right information and make sure that it's very clear and concise. We actually did a webinar about this several months back that you can refer back to. Again, that's on the website as well. But you just want to give them, the right pricing, how that breaks down, what that net rate is, to make sure that you're really comparing that rate to, any credits, any experience modification that they have, to make sure that they have the clearest picture possible as to how their premium is being rated and priced out.
Right, because if you don't do it, your competitor will, and that's where it gets confusing. Is that they're going to look like they're lower because they've netted the rates.
Right, exactly. You see that. You do run into that a lot, because a lot of people will present that net rate, and if you don't, that definitely will happen. You have to go back and explain. So you want to kind of avoid that and make sure that you're not having to go back so many times to the insured and explaining something to them.
Yeah, because they start to not believe you or trust you because you didn't communicate it up front.
Right.
Yes. Very good. Very good. Thank you, Caesar. That's really helpful information. Let's move on to our next case study, and that is going to be Lexi Goldspring, and we're going to be talking about a renewal case study, and she's going to be talking about the best strategies to retain your work comp renewals. She's going to be going over important renewal underwriting information that you would always want to gather on renewals, and then always remembering that the policy is audited. She'll go into a lot more detail. Lexi, would you like to tell them about your case study?
Yes, thank you, Renee. So I will present the renewal case study, and here we have a restaurant under the name Miguel's Mexican Restaurant. And you can see it's located in Concord. The location is a key factor to take in consideration because the rate per class code can fluctuate depending on the territory where the business is located. So that is something to take in consideration. Here we can see they have the restaurant class code, which is 9079, and they have a pretty high payroll of $2 million. In this account in particular, they have one location. Sometimes a restaurant may have multiple locations, but we can see the cause of the high payroll is due to their 30 full-time employees and then 20 part-time employees. Also, they have a pretty low XMOD of 65% with only 4 claims within the last 8 years on this account. So their loss history is excellent, but I'll go in more detail later about the XMOD. And we can see they have a total premium of $41,125. So this policy is a larger account, which means it'll bring more competition. So with that being said, we have to keep in mind that prior to the renewal, it does require careful review of many key factors that could affect the premium. And these are details that you should be looking for, asking your insured, and also communicating back to us. So I will discuss those in the next slide. Okay, so you always want to consider changes in the exposure. And what I mean by that is some changes could have an impact on the renewal that you'll want to consider, ask your insured. And these are questions that I, too, ask the broker prior to renewal. So for this specific case study, we may ask the broker, do they have live entertainment? Is the percentage of alcohol increased? Do they offer catering or delivery? And you always want to confirm the operations. So is the nature of the business the same from the prior year, or did some of their operations change? As I mentioned, it is very important to ask your insured specific questions related to the risk, because these types of changes will affect the renewal depending on the appetite of the carrier. So when a renewal is approaching, we always request an updated Accord 130 to be completed, and that's just to get updated information. What I'm mostly looking for is their payroll, their employee count, number of locations, their address, and if any ownership information has changed from the prior year. So these are the important key factors to discuss with your insured and also to update us on prior to their renewal. Ideally, we chose this case study because this renewal account is an example of a perfect renewal. Actually, prior to the effective date, we received from the broker a completed Accord 130 with updated payroll and also a mailing address change, so we were able to update their information in advance before binding the renewal. And then moving on to our second point, why is payroll so important? Yeah, so why is payroll so important? Payroll should be accurate throughout the policy period because, as Anne briefly discussed earlier, the insured will be audited after the policy expires. So if their payroll is much lower during the policy period than their actual exposure, then they're going to receive a pretty large bill when it comes to the audit. So depending on the carrier too, the insured could receive on their current policy a midterm endorsement that's automatically issued from the carrier, and that endorsement would update their payroll based on what they reported on their prior term audit. So for example, on this account, when I was working on this, I noticed the insured reported a much lower payroll on their previous year audit than what was listed on their renewal. So I had to go back to the broker, confirm, and they advised that they would be hiring more employees so to keep payroll as it is. So these are just some key factors to always be aware of. Another key point too is always keep in mind if an XMOD is included on their policy. I always pull their risk summary report from the rating bureau prior to renewal, and to the right side of the slide, you'll see a screenshot of this risk summary report. You can see it's from the year 2010 until now. And it's something to take in consideration. For this specific account, they have a pretty low XMOD at 65%. So the carrier might apply minimal credits or no credits at all because they already have a pretty low XMOD. So this can and maybe could become an issue if you have a competitive quote with another carrier and you need additional credits from the incumbent. And then lastly,
Lexi, in this case, they are actually getting a 35% credit automatically with the XMOD, and that's why.
Exactly.
Yes, that's why they're already credited. It's already credited so much that some carriers get really nervous.
Exactly, yes. So they didn't apply as many additional credits on this account. Then lastly, considering the competition with the insured. So it is important to get your insured to understand that we are looking at other markets to find the most competitive carrier for them. The goal is that we will present a couple of proposals to you. And for example, with this case study, we marketed this account around to all our carriers to find the most competitive premium. And one carrier did come in more competitive than their incumbent. So after comparing the proposals, we went back to the underwriter to apply additional credits, and then the proposal was reissued coming in lower. So always remember, we have a great relationship with our carriers, so we will do what we can to secure the bind. And then, so what is an efficient way to contact your insured prior to the renewal to get updated information? We'll find out on the next slide. Okay, so our quote and bind process, our work comp department, we implemented a renewal process called the 60-30-10 process. And what that means is we begin our process of review 60 days in advance from the effective date of their policy. And that is when we actually send our initial contact, reviewing and verifying all that information. And we encourage you also to inform your insured 60 days in advance that you'll be working on the renewal. Then 30 days before the renewal date, we will present the most competitive quote with a summary of the work we did or a few quote options. And at this point, you should be presenting renewal terms to the insured as well. And then lastly, we send a 10-day reminder informing you the renewal is approaching. So it is very important to treat every renewal like new business. You must touch a policy at least once a year because work comp policies, they might not require a heavy labor on the service side. So it's easy not to have contact with the insured throughout the year, but it's very important to regroup at renewal and take your time, being very professional. And then I say this jokingly, but you want to find out your insured's temperature. How are they feeling about the renewal or about the quote you presented? Are they marketing their account to another agent? Are you aware of it? And do they have a target premium? You can communicate with your insured, or you have to communicate with your insured, or there will be a risk of losing the client. So always remember that someone is always hunting your account. So I encourage you to watch our recorded webinar, learn the underwriting aspect of work comp. It's on our website at cidinsurance.com under the tab resources, and then you click on webinars. We focus on resourceful tools that you can utilize in your office to manage your renewals, making sure to retain each account at renewal. And then lastly, although some work comp policies, they do auto-renew depending on the premium size, we still request a written bind order to close the renewal. So make sure to always review those binding requirements with the insured prior to their effective date.
Excellent, Lexi. Thank you for the great information. I'm gonna close by talking a little bit about the best practice takeaways from what we just discussed. What I heard from the experts, our underwriters, is that you want to start the new business or renewal process early. Don't wait to the last minute. Take our lead. Use our 60-30-10 process, and you can contact Lexi or Caesar if you want to know more about that. But we're following that. You can follow it with us, and it makes it easy, to reach out to your insured in the same manner. Gather as much information as you can about the risks. I can't say this enough. You want to ask questions every which way, in different ways, in order to make sure that you know enough about the risk. And if it's new business, you've got to really get to know it. And then if it's a renewal, you need to see if there's changes. And then utilize our expert team for competitive quotes. They're here to help you, and they will. They're very good at what they do, and they've got the markets, and they know their markets well enough to be able to make the process easy for you. And then know you're insured. Never assume you have a bind order, and that's. We all fall, into that occasionally, and so it's really important that you make sure that you know you're insured and know where they stand. So. Thank you all for joining us. I don't see any questions, but if you have any questions, please type them in now. And as everyone, Lexi and Caesar mentioned, we've got lots of tools on our website for marketing tools, proposal tools, broker fee agreements. So please visit our website under resources. You'll find a lot of good things. You'll find our upcoming webinars there as well. And we would love for you to take the survey so we can get some feedback on how we can better serve you. And Caesar's ready for your submissions, your work comp submissions today. So we appreciate those of you that are doing business with us already, and we look forward to doing business with those that are joining us for the first time. Thank you again, and have a great day.
Thank you, everyone.
Thank you.